Well, as we open up our grain trade here on a Monday, we'll talk with Dewey Strickler of AgWatch Market Advisors. He joins us right now. And Dewey, before we opened up our daytime session, USDA did announce an overnight export sale. It was corn once again. So corn has had the spotlight for about a week straight now. And here, this time, it was to Colombia. A new buyer entering the picture there with a significant amount, 100,500 tons. And they bought corn for the 2018 and 2019 marketing year. Did it have much impact? Well, overnight we had a higher tone on pretty much all the grain trade. We had the corn opening up this morning with the May contract 4 higher at 377. So it is following through from its Globex trade. December new crop corn now 3.5 higher at 397 3/4. If we move on to our soybean trade, now we're starting to see some double-digit gains. We were about 6 higher overnight. Now you have the May contract 12.5 higher at 924, within a penny of its high of the opening range. We have July up 12, and we have the new crop November contract on the soybeans now trading higher. It is up at 956 3/4. That would be up 11 cents right now. So pretty good jump in the soybeans to start things out today. If we look at the wheat market, we have the wheat mainly higher today. We have the May in Chicago up 1 3/4 at 459. Now you have July 1 1/4 higher. Kansas City on the May contract, you have it trading 3.5 higher at 448 1/4, and July up 2 3/4 at 456. Dewey, I want to go back to you and get your thoughts here on this grain market activity. Is this mainly China talk, or is there more to this rally today?
I think there's beginning to be a little more to this recovery today, especially in corn. If you look at the forecast going through mid-March, and also if you look at what's been going on in the southeast, we're looking at pretty wet conditions, cooler temperatures for the most part here through mid-March. That means, field work's going to be delayed here. So I think we're seeing a little of the influence here more in corn because of that than what we are in beans. I think with beans, the only thing you're seeing going on, we've been running hot and cold about getting a trade deal with China. We're going to have a summit meeting on March 27th. Likely they're going to announce something there, but the trade might be just getting a little bit too hyped up here on soybeans for that, though.
How are we coming along on the South American harvest right now?
Well, we're coming along rather well. I haven't caught what the percentages were last week as far as the harvest was concerned there, but we have been running in the weeks past above what our averages have been.
Now, we had some fairly stout deliveries on corn this morning. Is that going to be a problem or not?
I don't think it's going to be a problem here. We're getting those deliveries out of the way here, and with that said, the trade, they will look at deliveries about for the first day, maybe second day. Then after that, they pretty well just put them aside.
Okay, corn deliveries this morning were 2,267 contracts. Soybeans came in at 545. Your thoughts on this wheat market here? Been hovering around contract lows for a long, long time here, Dewey. Can they break free of that?
Eventually, one day they will break free of that. The thing we've got right now is that when you look, for instance, at the July contract, we did put a bottom in here. Friday was an impressive bottom, not as much as it was here in corn. So that said, we need to see a little more proof in the pudding here that we actually have put a low here in wheat. I will say this, when you look at the value of wheat versus corn, it's just about 22% above what corn values are trading for. So the most I think you can really expect to see that narrow to would be maybe about 20% in that area. So you're going to start seeing, I believe, a little wheat go into feed rations here.
All right, we'll come back in a moment. We'll see how the livestock trade is opening up on a Monday. Dewey Strickler is our guest, and we will be right back. Let's open up our livestock trade here on a Monday. We begin with our live cattle market, and so far this morning we have the April contract on the live cattle now quoted at 129.13. And I thought maybe I was imagining things. I looked a little bit ago and it was higher, and it was as high as 129.80, but now it has turned around and gone lower already this morning. So we've been on both sides of unchanged here. So we're 43 lower now at 129.13. June down 15 at 120.28. That one also had been higher by roughly $0.50 or so. Now, if you look at the feeder cattle market this morning, this is how we now stand. We have the April contract a nickel higher at 145.10. But there again, that has come off of its earlier high already by nearly 50 cents. Let's take a look at May. It's 15 higher at 146.68, and that's a $0.50 off its earlier high this morning. Now, let's take a look at the lean hog trade. How's it going to open up this morning? Well, we have the April contract up $1.10 at 57.50. That's only 30 cents from its high of the day. And the May contract on the lean hogs is up 58 cents at 66.50. That's how we're opening things up here on a Monday. Let's go back to Dewey Strickler. He's with AgWatch Market Advisors in Franklin, Kentucky. So we did have a higher tone on the wholesale beef trade late last week, Friday afternoon, and also higher cash cattle trade, but doesn't seem to be really holding up the market here today.
Well, no, it's not. You know, we've got pretty lofty levels here. We're getting overbought here in the cattle market. When I look at Friday, we had a top put in here. I think we will go up higher in the April contract, possibly to 131.5, but I believe that's just about going to wrap it up on cattle.
Do you think traders are taking the weather premium back out of the cattle market now that they had put it in last week?
I don't know that they're taking it out here just yet. It's just when you see a market like we've seen here over the past 2 weeks, it starts getting a little tired and a little bit labored on the up move here. So I think, the weather probably has been factored in for the most part here.
Now, when you look at a lean hog chart, how convinced are you that maybe a bottom is now in finally?
I'm not real convinced that we do have a bottom in. We might. When I look at the weekly charts, it shows that we possibly in the April could see one more low below this 52.25. So I'll give the market benefit of the doubt. That could still develop.
Okay, just to recheck our wholesale cutout values on the beef and the pork from Friday afternoon. I believe we have those here. So the beef cutout values were higher across the board. We had the choice cuts up $1.34 Friday afternoon, select cuts up $1.52. On the pork side of things, as far as the carcass values go, they were up $1.43 at 61.92. The belly market was up $4.37. I want to run through just a few sheep prices for you across the country here. On the national sheep summary, overall, the lamb market was said to be about steady to $10 lower. San Angelo, Texas had a range of 226 to 234. The Pennsylvania market, 230 to 260. We had Kelowna, Iowa checking in anywhere from 205 to 215. Fort Collins, Colorado last week was 197 to 207, and Missouri checked in about 215 to 235 for a sample of their sheep market last week. Hey, Dewey, good to talk with you. Thanks for helping us kick off the trading week here on a Monday. Appreciate it, and we'll talk to you again soon. Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. There you go, Janet.
All right.
Up and rolling along.
Thanks for getting things started.